A very good evening to Dato Arasendran, fellow colleagues, and beloved students. CEO or CTO Series is an event organized by Enterprise at APU. At Enterprise at APU, we are building a robust platform for students to explore their entrepreneurial ambitions and to bring ideas to reality. With that in mind, Enterprise at APU brings together experienced entrepreneurs, mentors, investors, educators, and corporate figures acting entrepreneurially to share their insight and experience with students and academicians. Today, we have Dato Arasendran as our guest speaker. Dato Arasendran is the Vice President at M Private Banking, a business unit of M Investment Bank. Dato Arasendran has over 25 years experience in the financial market, ranging from credit evaluation through to corporate advisory. That includes financial structuring specific to corporate clients. Dato Arasendran holds professional membership with the Asian Institute of Chartered Bankers, Chartered Institute of Securities and Investments, Federation of Investment Managers Malaysia, and holds the Capital Market Service Representative license from the Securities Commission Malaysia. Before we move to our session, maybe Dato Arasen, you can introduce yourself. Where did you born? Where did you grow up? Where did you further your education, tertiary education?
Thank you, Guna, for the kind introduction. I've been in the industry for about 26 years, having graduated in England in the mid-90s. I spent the initial years with a finance company in Malaysia, where I participated in corporate lending. So after having done that for 4 years, and again being disrupted with the 1997 financial crisis then, so lending was not the best word used at that point of time. So I then decided in the year 2000 to try and move into another arena of finance, which was, instead of giving money out, credit, I decided to go and get money in, which is wealth management. So I joined Standard Chartered Bank in Singapore and was with them for the next 3 years, learning the trade of taking money in rather than giving money out. Thereafter, I think in the year, it was the year 2003, I was given that opportunity of being part of as an initiator to set up private banking in those days, as it was known as M Merchant Bank. They never had this arm in private banking, so we spearheaded it, and I was part of the team. And 19 years later, I'm still there. Okay.
No regrets.
Yes, no regrets. And I've seen it evolve over various other challenges that we have faced. So digital transformation is just part and parcel of change. And we've seen it in the financial industry many a times. Be it the financial crisis, then the landscape changes again. So, it's something about, that adaptation, change and adapting to the environment.
Thank you for the introduction, Dato. Just for your information, today, Dato oversees the fund management that has grown from 120 million asset under management in 2019 to 260 million asset under management as at January 2021. His current management role also includes the collaboration of private banking with all the other business units within the mBank group. This has resulted in organic growth with a growing traction of more than 100 million per year. Collaboration activities include cross-referring, corporate clients for restructuring, mergers and acquisition activities, share placements, corporate finance, equity and debt capital market, as well as other financing needs for corporates between the business unit. Without further ado, let's move to today's topic. Digital transformation. Do you make it success? Digital transformation is the integration of digital technology into all areas of a business. Fundamentally, changing how you operate and deliver value to customers. It is also a cultural change that requires organization to continuously challenge the status quo, experiment, and get comfortable with failure. With this note, Dato, I will come to my first question. Why is digital transformation one of the most important factors in business sustainability for banks today?
Thank you, Gunnar. Before I address this question, I'd like to just pick up on what you earlier mentioned about collaborations when you were giving a briefing of what I do. I think the word collaborations has become a very relevant word in today's environment. Everything evolves around evolving and collaborating. Even in this digital transformation journey, it's all about collaborations as well. I mean, you will hear me mentioning this term as we go along. Okay, now coming back to that, the first question, the landscape that we have right now has changed. You either embrace it or drop off. It's as simple as that. Digital technology is a keyword. We, as a financial institution, we have to change and move into that landscape. Each bank in Malaysia, we need to embark on our respective digital transformation journeys, to remain relevant. Actually, 2019, the pandemic in 2019, it actually fast-tracked the whole digital transformation amongst banks. Why? Although this digital transformation was initiated years earlier, everyone took snail steps to make the move. Change, again, is something very difficult. Most of us are not very adaptive to this change, and we take our times because it's something that's going to recreate. It's going to be a new whole wheel, So hence, everyone took their snail speed in moving towards that direction. When the pandemic arrived and everyone was the work from home, banks, we had to figure out a way how to reach out. And we had to adapt into different platforms, start figuring out virtual meetings, contactless meetings. How do we give quotes out to clients? I mean, in the bank, there are various different business units. So if you're talking about the branches they couldn't operate. How does anyone come over and deposit the cash that that was collected. So all these required a lot of thinking caps to be put on. And where we are 2 years later, I think it has fast-tracked the whole digital transformation journey. And a second reason, apart from the the pandemic, is the competition from fintechs. Because the people who did really well during this pandemic, this period, were the fintechs. They came in, they had alternative solutions, they were embraced. People were ordering foods, people were ordering, making their purchases using e-commerce platforms. And this just became the most relevant arena. People who had shops could not do their selling, but people and delivery boys, these were the main platforms. So tech startups and other non-banks have successfully embedded financial products into their digital offerings, chipping away the market share from the incumbent banks, which we have traditionally enjoyed. So it is pretty much called the fintech revolution. So are we going to sit back and watch them slowly scrape away our core business, or for us to mutually try and work together and adapt into this platform? Yep.
I still believe that technology did not disrupt only banking industry. I think in general, all over other business too.
Yes.
Today, my daughter says the other day, she told me, Papa, let's go to the restaurant. And I told her, no, Papa is busy today. And she said, why don't we grab it?
Yes, yes.
So what I think is, traditionally we used to go to restaurants. Today we bring the restaurant to our house.
That's right. I mean, I'd like to add on to that. I mean, you're talking about your daughter, but I have an 86-year-old mom. And I think equally, she has adapted to this platform as well. She goes, why don't we grab food, the order? It's so easy. We have the food all served at our convenience of the home. So we are not losing out from the experience of eating external food,
Yeah. Agree, Dato. Coming to the second question, Dato. Now, we already know that technology is going to be part and parcel of our life. We have no choice. And the pandemic bring us strengthen the technology industry into our life. What are the challenges faced by banks in implementing digital transformation?
I would say one of the...
And I believe in a bank, we call banks as a dinosaur.
Yeah, that's right. I think one of the catalysts is having the ability to the speed of change, the speed of adaptation, because your competitor is right next to you, fintechs. So they are the ones applying a lot of pressure for us to either innovate or collaborate. So you've got to sit down and think, am I going to invest more money into platforms? And these are not my area. This is not my area of competence. Should I rather collaborate with them rather than them inching into my space, and taking it away from me? I might as well go together and we work as a hybrid, in a hybrid format. The other challenges faced by the banks is also the cost. Increasing the whole transformation, digital transformation, we set out, I'll use my bank as an example. The initial cost was approximately in the region of 60 million ringgit. And I think that has escalated with time. As you go more into it, you realize there's more capital required into this technology. And also, there has been a lot of implementation setbacks. When we started a trial run or gone live, etc., then there was tweaking issues. We had to tweak it. Sometimes the capacity, I mean, I'm not technically competent to go into greater detail, but this is what I heard out there. And the most important other thing when it comes to people is the shift in mindsets. It's getting people to change their mindset that digital is here to stay. It's easier with the younger generation. It's not so easy with the 40s, 50s category of people.
Yeah. But I think the older generation also is slowly changing now.
Yes.
Just give an example. My mother today start her cooking using YouTube. I
Yes,
think
that's very true. But when the calculation is done, when you look at the demographics, and when you're talking about rolling out something, we look at the demographics at a banking arena. We are looking at something with a 10-year horizon. So when you look at a 60-year-old or a 70-year-old, that does not become part of the input or the weightage, because if you're looking at a spectrum of 10 years, they become irrelevant. They won't be participating in active banking transactions that will require for me to focus on. The people that we look at when we do the computation is actually the 20-year-olds, because the 20-year-olds become 30-year-olds, or the 25 become 35, and they are going to be the GMM, the general mass market.
Yeah. Understood, Dato. So moving forward, Dato, you spoke about fintech companies. We understand fintech actually use this pandemic as an I will say an opportunity to grow their business. So my next question, fintech startups like companies like Stashaway, Touch and Go, and TechFin companies like Alibaba, Grab are giving steep competition in the financial services business today. How are banks actually coping up with this competition?
Okay, I think in 27th of December 2019, Bank Negara Malaysia (BNM) had already made an announcement that there are 5 potential digital banks to be approved. So how do the banks look at it? The banks our conventional or the traditional banks, we tend to look at it as turning adversity to an opportunity. The key word again is collaboration, as it makes more economic sense, rather than actually trying to be a digital bank or we collaborate, and it brings economics of scale.
So that means in future, do you think that number of branches will be smaller? Number of human resources needed by the banking industry will be shrinking?
Okay, on this aspect, which I could clearly say is, I think a lot of branches, previously, traditionally, you look at branches in every corner. The minute a little city has come out, or it's a satellite city, there has to be branches there. And that is a cost factor. So right now, if you're looking at moving into the digital landscape, you'll be looking at the cost involved in this setup. There has to be an offsetting. The offsetting has to take place somewhere. I cannot be incurred with an operating cost of running branches, as well as capital expenditure into a new arena. So hence, we'll be looking at a drastic shrinking of branches around, followed by also the shrinking of staff at branches. So you'll be looking at a lot of people, employed people, having and needing to upskill and upscale in order to remain relevant, or else there's not going to be a spot for them, because as you go into digital space, you handling the branch activities or the back rooms and all that, from maybe 100, we just probably need 10.
So the keyword here is the upscale.
Upskilling and upscaling.
Yeah. Okay, thank you, Dato. Many discussion are taking place around digital transformation, but some say human element is still the key in business sustainability. Example, networking, building relationship. What is your opinion, Dato?
I would use I'm from private banking within the investment bank. I could use that as an example. You can never remove the human element in private banking, no matter how much you go into technology, because that has been fundamentally and traditionally the key feature of private banking, which is that personal touch. However, you can complement by having by incorporating digital technology transformation through technology, incorporating it together. You're able to complement your offerings in the sense that right now we have one RM who handles 100 clients from A to Z.
RM is the relationship manager.
That's
Dato?
right. That's right. The RMs are the private bankers who handle their client base. And in private banking, we've got about 25 in Kuala Lumpur, 25 private bankers. And the 25 private bankers, just to give you an idea, private banking, we have a total AUM size of about 10 billion. And so we have 25 RMs in Kuala Lumpur, in Klang Valley, followed by another, in total, about 45 RMs around Malaysia, including Sabah and Sarawak, our branches. And on average, we have one RM handling about probably close to about 300 million on average of a $300 million worth of clients within their platforms, ranging from about 50 to 100. So you're looking at the RM spending time doing KYCs, EDDs, which is enhanced due diligence. We are a regulated industry. So there's a lot of regulatory compliance documentation that needs to be done. So RMs are running around trying to meet these compliance thingies. And sometimes we question how much of it is actually relevant to generating a revenue. You know, you're doing more housekeeping than the generating revenue, or giving ideas or exchanging ideas. But bottom line, when you run a P&L, it's about revenue. So with digitalization in place, I think a lot of the initial part of it can be eliminated by being within the reach of the client. The client can decide what kind of risk he's willing to take by going through a digital platform and saying, okay, this is my risk appetite, by answering a series of questions, and automatically that opens a window on products that might meet his need or which is within his risk spectrum. And from there on, it's only towards the tail end that he touches base with our relationship manager, who would decide whether, okay, you know what, I'll take that final point where at the point of sale, which is, should I go for this product or that investment idea or this investment idea? So a lot of time is saved, and that particular RM can now handle, instead of 100 clients, he can handle 300 clients because he's only taking them at the tail end of it.
So that means technology actually simplify the routine job.
Yes, correct. It frees up a lot of time.
Frees up a lot of time. It increases the efficiency.
Efficiency, and also the RM can focus on the final point of sale rather than the A to the Z. He can focus on the tail end of the client has already complied to all the necessary regulatory frameworks, and it reaches a point where he's just deciding between A, B, C, and then the RM is able to then do the personal touch to conclude the investment.
Yeah. So in that case, the RM can focus more on building the relationship and building the business.
Correct. So in a nutshell, a hybrid approach where the digital transformation complements the traditional approach and can facilitate this whole, can make it its own sophisticated, I would use the word sophisticated footprint in this new landscape.
And recently, I read this journal from JP Morgan, and people who actually invested in robo advisors, they still prefer human touch.
I think in Europe, this robo advisory was something that was tried, but in private banking, it has never been applied, because I think with the kind of money that you see in private banking, I think that final touch is still required. I don't want someone talking to me out of a machine. You know, I mean, I'm sure a lot of us have been through when you call Astro or you call a customer service somewhere and there's an automated thing machine rattling away something and you're trying to get to that point and he conveniently just moves on to press 1, 2, 3, 4, 5. You know, it reaches a point of frustration. But I think in the retail business, yes, it could be possible, and it could be workable. But when it comes to private banking involves a lot to do with personal. I know what A wants, and I want to tailor it towards him. So it requires that final touch where, hey, you know, like, why don't you consider this and that and that? And I think that fits you best because your risk appetite is along those lines, you know?
I think it's more personalized
That's
and
right.
very much customized according to the customer's need, the client's need.
Yes, true.
Okay. Moving forward, Dato, this is some entrepreneurial questions since you have met many entrepreneurs, the business owners. Some research shows that the failure rate of startup is around 90%. And statistical data shows 21.5% of startups fail in the first year, 30% in the second year, and 40% in the fifth year. In your opinion, what is the reason of this failure, and what is your advice to these young startup companies, Dato?
In my opinion, I mean, my opinion is based on my exposure to corporate clients the past 26 years working in the banking industry. Failure is an integral component of an eventual success. It is a component of the eventual direction towards success. You can't tell me that, hey, I've never seen failure and I've grown this big. It just doesn't happen. It's how you manage failure. It's how you manage. As I said, I'll be very concerned if I met someone who is like, who has never fallen, who has never, it's how you handle the failure. Apart from handling the failure, it's the determination to survive, to step back up, get back up, and stand up. Today, I think I'll use an example, but unfortunately, I can't mention names. But in the food industry, everyone talks about gourmet burgers and how this it's a startup and how successful they are. And how they've just captured that what do you call it, the 20 to 25, 30-year-old bracket, and how successful they are in these localities. But nobody knows that they have failed in 10 other startups, I think more than 10 other startups that were kicked off years ago prior to this particular success. So you learn from the little mistakes with the least kind of capex investment involved. You know, you pick up because the environment is dynamic. You may know your product, you may not know the market. You may be passionate about your skill, but does the market want your skill? Does the market? There has to be a total fit. It's like it's like a puzzle. What is important is how you handle the failure, and always having a contingency plan and the determination to never give up. I mean, this is how I see it. And I think I have here some key pointers which I feel that are important. You need to understand the market and adapting to the changes in advance or quickly. Identifying a gap and feeding the gap in the marketplace with solutions. The ability to sustain or even meet growing expectations means you need to scale up. You may be good at what you're doing, but when the demand sets in, you need to scale up. Can you handle the scaling up? You need to figure that out right from the start. Then being passionate, that is the minimum requirement. You need to be passionate. You cannot be doing it because you want to make money out of it. You need to do it because you're passionate about it and not lose steam. You will see bad times. It's persevere. Keep lean, operate lean, just persevere. Financially sound to operate lean, yes, in anticipation for stormy days ahead. Okay? These, I think, are some of the things I've seen and observed from startups and people who have succeeded. They did not succeed because they got it all right first time out. They all have failed to restart and re-see the gaps in the market and meet that gap and try and fill that gap. There's a gap, there's an opening. How do you think Lazada, e-commerce, they found the inefficiencies in systems? Look at Grab taxis. It started off with the e-hailing, as they called it. I mean, there was a lot of challenges out in the market. I think globally, you had Grab everywhere. The youngsters just jumped at it, using the handphone to do your calling of a cab, and it was competitively priced, But the taxi drivers in town, which was under a regulated industry, they started getting offended. But nobody trespassed into that arena of being a taxi where you are regulated. They call themselves e-hailing services. So by virtue of definition, there was no breach of any legal, there was no breach of anything legal. So hence they moved into, slowly delivery services came up, from delivery to courier to now they're about in every other space, So yeah, and then more and more came into the bandwagon. All this is a benefit to a consumer.
I think they are also coming into Fintech platform.
Oh yes. Shopee. I think Shopee is C Limited is one of the candidates in Singapore to be selected for a digital bank
in Singapore.
Yes, that's right.
Okay. So the key message here, Dato, you better fail now.
Yes. Do it early, start off early, or understand the risk involved in anything. That's not going to be, it's very dynamic, If I may be very good at coming up with these burgers, then the marketing tools come in. The marketing tools of price, product, place, all these come into place, So it's a very dynamic kind of, then suddenly the environment changes. Pandemic comes in, for example. Suddenly your business model doesn't work again. You can't do your sales. So ability to sustain that period and operate lean, or to change the model again, adaptive, That's how I see it.
Great. So the failure and the adaptivity is the key message to sustain a business. Since Dato, you are from investment banking background, what is your investment advice to our students?
I think risk is the key word. I mean, as a bank, as a person who is financially trained, everything revolves around risk. I mean, when we look at a client, it's not about selling a product. It's about assessing the person's risk appetite and trying to see what fits into within that risk parameters of the client. That takes time. And that takes a lot of understanding about the client's needs and following the pattern of whether the client is willing to open up to you, over the period of time. But as you get to know the client better, you would realize that you are having a better understanding, and you're able to penetrate and understand his risk and advise him on what is your views on things, and for him to accept your views. So to understand the risk and to ask yourself whether you can accept the risk to obtain a certain return or reward. I think that's one of my investment advice to all you students. It's not only in the investments, but actually in every part of your lives. I mean, in game theory, I don't know whether you guys are studying probabilities or okay, the probability of success versus failure, and what is the percentage, and whether you can handle the downside of it not happening. Can I afford to take the risk? It boils down to whether you can take the risk.
I've seen this they say in life, the biggest risk is not taking the risk.
Exactly. They say not taking the risk. But as long as you understand what the downside is, I think, and you're educated in the sense like, look, if I put in X amount, my downside is I could lose it all. And then you ask yourself, can I afford to lose it all? And if your answer is yes, go ahead. And if not, don't do it. Look, I'll give you a typical example. Cryptocurrency. Cryptocurrency is something that everyone is talking. It's part of the digital landscape. Would I go into digital cryptocurrency? Yes, I am in it. I am in it because I'm prepared to lose every cent in there. Because to me, I've seen the primary issue with crypto today, it does not have an anchor. It does not have a bank regulating it. It's free play, demand supply. That's it. It's virtual. It's a form of, yes, growing a lot of traction, but there's no regulatory. There is no hard currency in there. There is no bank or central bank binding it. When I think it works well when the confidence levels are low when it comes to countries where they don't believe or have faith in the central governments and central banks. I think that's when I think the bigger picture arises. It's a bigger picture. And I think the volatility of, I've seen platforms. Yes, mBank is part of Luno. But Luno, we are not part of their cryptocurrency. They are using mBank as a platform for them to move, for you to put your currency in, your cash management. That's it. So we are not endorsing the crypto world as yet. But yes, people like Binance, Luno, they're all various different platforms that are around. I don't think based on volatility, I don't think it's going to be something that's going to make official tractions. I think El Salvador, I think made it a legal tender, I think a few months ago or a year ago. And I think they've put it on hold right now. It's not gaining much traction within the system. Yep.
Thanks, Dato. So in investment, please understand your risk.
Yeah.
Then you start your investment. And coming to the last question for today's session, Dato, how should students prepare themselves for their future career? What is your advice, Dato?
Be relevant and adapt to changes. Always remain relevant. Like I gave you the example, when staff at branches who are doing just transactional banking, and when the landscape has changed and digitalization has come out, if they continue to remain there and look for banks to offer them jobs, it's not going to happen. They just have to upskill, move on, get the necessary qualifications to upskill themselves to remain relevant. So you need, if you're willing to be ahead of the curve, to anticipate, and if you feel that you want to be unique and be ahead of the curve, and that's going to be risk taking again. And the risk reward methodology remains. If you made the right call, you'll be rewarded with a career. My final word will be hungry, but not greedy. Thank you very much. I think, I hope I've answered all the questions as closely as I could. Yeah, thanks, Guna.
Thank you, Dato. Thank you for your insights and valuable information today. Let's see whether we have any questions from the floor. Oh, that's a question, Dato.
Yes. Digital transformation can be complex. How can we simplify the
We
process?
can't hear you.
Sorry.
Maybe can you bring your mic nearer?
Okay. Digital transformation can be complex. How can we simplify the process? And how do you measure if your digital transformation was successful?
I'm sorry, I couldn't hear that.
Okay. My first question was, digital transformation can be complex. How can we simplify the process? And the second one is, how do you measure if your digital transformation was successful?
Okay, let me, what I caught on was the second one. The success of the transformation is based on its traction traction levels. So by implementing the platforms and rolling it out, going live, as they call it, and then measuring the take-up rate, and versus against, and against the issues that arise along the way. I remember, I'll give you an example. When the pandemic was in progress, and we automatically had to do Teams virtual meetings, and halfway through, the system would just drop. So these are things that caused was disruptive. It was disruptive, and here clients are beginning to falter on the prospects of doing this kind of meetings and saying, hey, why don't we just meet when this whole thing is over? And we just had to get them into the right platform. Like, look, business can go on. Let's improve on the systems too. So it's measured. And then it's given it's constantly measured to see how feasible it is, and then eventually the traction rates are measured and seen. Okay, more people are adapting to this format.
Thank you, Dato. Dato, we have some questions from our online participants, students. The first question, you mentioned about the digital transformation was slow prior to 2019. Why is that?
Change. I think it boils down to, you see, we are creatures. We hate change.
Agree, Dato, agree.
Okay, so when you tell me, well, we're going to do this digitalization, hey, am I going to remain relevant for long? That's just the normal. Why? We've been doing it all right. We've been getting this kind of revenue. Tomorrow, this is going to cost 60 million to kick off. It's not going to be held by my company. My company is going to pass it down to all the relevant departments. They're going to carve out what is each one's contribution. So perhaps it's going to be 5 million in my P&L. So I've got to go out there and look for revenue to make up for this cost, which is going to be imposed on me. Do I need that? And I'm not going to be really the beneficiary of it, because by that time, I may not be part of the system when it's crystallized and it's become functional, where it becomes revenue or enhanced revenue generating. I may not be around. So why do it? Why bring about change? So it's the pandemic that gave us no choice.
Next question, Dato. Is digital transformation strategy is a detailed plan for using digital solutions to improve the physical aspect of your business across engineering, manufacturing, and services?
Could you repeat that question again?
The question they asked is, digital transformation is also applicable for other industry like engineering, manufacturing, and
I
service.
think it's universal. It's across the board. The landscape has changed. It goes beyond banking. I mean, look at e-commerce. E-commerce is just another platform. Engineering will be surgeries. I mean, I was very impressed. Professor Angelina took me around your cybersecurity, your AI departments. I mean, you're talking about AI, you're talking about robotics, you're talking about everything within this campus. So I can imagine the quality of students that's going to come out of here in 2 years, 3 years, 4 years' time. It's totally mind-boggling to me, because I came from a different generation when I was in university. We never had, show me something on cybersecurity that was live, in your labs. And I think I was speechless for a while, and I said, Prof, I got to get out because I got to prepare for the next presentation here. But the landscape has changed, and it goes beyond boundaries. It goes beyond boundaries. It's not just a particular industry. It's universal. It's not just engineering. I think it's going to be a point of time when I already know this is happening in surgeries. You don't need to fly the surgeon down to Malaysia to conduct a particular operation. He can actually do it using robotics. He can do the intricate surgery from Italy or wherever his host country is, and completely do that using robotics, and the surgery done on a patient in Malaysia. So that is why technology has broken borders. I mean, it's here to stay. It's our landscape today.
Thank you, Dato. Next question. Do you think that we will still use physical payment in the future?
I think it'll phase out. Why do I say that? The pandemic is one of the reasons. People don't want to touch dollar notes, currencies. Then the second reason is also cryptocurrencies, alternatives which are cashless. And thirdly, I think we are looking at the new gen, which is the youngsters, 20-year-olds, 30-year-olds. That's part of their system already. It's part of their DNA. We, people in my age group, are adapting slowly. There's a little bit of positive traction. People like the older generation, like my parents, it's like, let's just not buy. Let's just not buy. If you want anything, just ask him to go get it for you, So they just steer clear,
Next question, Dato. Which country do you think has the most potential to have the most advanced digital transformation in the future?
Run that by me again, sorry.
Which country do you think has the most potential to have the most advanced digital transformation in the future?
I think it'll go in accordance to which is the stronger currencies globally. I think that's where it's going to be led by, because that's the kind of money that they're able to spend, and they've got the foresight of bringing it where they want. We Asians, I still feel that we'll wait and look and see, and no choice. If they're setting that global standards there, we adapt to it. But again, I reiterate, pandemic has just been, in many ways, it just disrupted us to change and to move towards that landscape.
Next question, Dato. We have another last two questions.
Sure.
Do you think Malaysia is giving sufficient resources and facilities in digital transformation compared with other countries?
I think it could be better.
But there is a avenue is given, I think.
I think there's more that can be done. It's whether we can afford it at this point of time. It requires infrastructure changes. It requires catalysts and what do you call it? Grants given out to people to include this within their system, to change and move towards digital platforms, etc. Subsidies, yeah. Are we doing enough? I would pose the question: are we doing enough, or we could do better? I think Singapore is doing far better.
Agreed, Dato. Last question, Dato. The student asked, there is two components in this. Do you think bank in the world is going to be virtual in many ways for upcoming years?
Yes. A lot of the functions of the banks can be through digital platforms. You don't need individuals. I mean, look at SMEs. They cannot be taken. I think a lot of the local banks now have moved towards digitalization, focusing on SMEs. Why SMEs? Because SMEs contribute about 40% of the GDP of Malaysia. And it involves 10 million over people. And I think MBank, for that, has already initiated a total digital end-to-end. Means your whole application for a loan can be done without any physical meeting through digital platforms. So I think, yes, in a lot of the functions within the bank, you can go virtual, except maybe for a small cluster, which is private banking. I could clearly see private banking is one of them. And I won't say it'll go totally, you totally can't. As I said in my Q&A, it will have to complement. And a lot of the task will be taken by digital. And the final touches, you still need the traditional human touch to it.
And the second question from the same student: do you think crypto going to rule the world?
I've got to be very careful here. But I think the biggest issue they're going to face is regulatory issue. Whether you accept or don't accept, or whether people are still transacting, etc., whether we see it's fine, it's good, all is good. The traditional regulatories will take time to find a common platform where they can monitor, they can regulate cryptos. So I don't see it, I don't see it happening in the next 5 years.
Thank you, Dato. Thanks for all your answers. And for every beginning, there is an ending. So we have come to the end of our webinar today. For students who joined us online and physically, please scan the QR code for e-certificates And also there are two codes, QR codes, and also please provide feedback for us. Thank you again.
Thank you for having me. It was a pleasure being here. And I must say this, I'm totally impressed with your campus. I am indeed,
Thank you, Dato. Thanks a lot.
Thank you.